Hi, Max.
Hi, Prashant.
Every time I walk behind Max, I feel like I have to walk on my toes because he's so tall, and I look really short. So I was trying to figure out a way that I come out first so that I don't look so short, given how tall he is. Max and I have known each other for 15 years. We were partners together at McKinsey. We were partners together at JPMorgan. And now we are partners together in a very different way. Melio and JPMorgan are working quite closely in building our business, and JPMorgan's been incredibly helpful to us in helping us scale. So perhaps, Max, just to begin things, could you share a little bit about what you do at JPMorgan in your role?
Of course, first of all, thanks for having us and thanks for joining our session. I'm responsible for payments and commerce solutions at JPMorgan Chase. That is basically a combination of three businesses. First of all, our treasury services business. This is where we move the famous $10 trillion a day, 120 countries, 120 currencies, a big scale business. Then it is our merchant acquiring business, where we are the largest acquirer in North America, largest e-commerce in Europe, and also the whole commerce business that comes with it. And then number three is embedded finance and solutions. This is where we bundle all our industry solutions, think healthcare, public sector, automotive, marketplaces, but also our horizontals, foreign exchange, data and analytics, trust and safety, and all that comes around payments. And that is basically our wholesale payments business.
I think JPMorgan obviously needs no introduction or background. JPMorgan is such a well-known company for its consumer brand, for its investment banking business, for its commercial bank. I didn't quite realize myself the breadth of JPMorgan in the way JPMorgan helps fintechs. Up until I joined Melio after my role at JPMorgan. And Melio is a B2B payments company. Our mission is to keep small businesses in business. JPMorgan is our tech provider, our payments provider. Our FBO account is with JPMorgan. We take virtual cards from you guys. And you've been just an incredible partner with us in our scale-up journey. Perhaps this group can, it'll be helpful for you to describe to the group how JPMorgan works with fintechs like us.
We do a lot of work actually with fintechs and for fintechs. If we first start with the with fintechs dimension, we really partner a lot with companies like Melio that help us accelerate our roadmap and deliver better solutions to our clients. We have really embraced the fintech partnerships over the last 5, 6, 7, 8 years and have gotten really natural about it. What do? We have roadmaps for our products that we follow, but it is really important that we have an open perspective in terms of what are firms we can work with to accelerate our roadmap or de-risk our roadmap. And in those cases, we look for partners, we see where there's a win-win, we offer distribution, we offer advice, we offer capital, and then we have fintech firms who can leverage our platform, gain distribution, gain access to new markets, and it's a true win-win for the whole partnership as well as for our clients. And Melio is a great example. A tech-forward platform works with companies like Shopify and Capital One, and we really have a great synergy there, coming together and seeing how our products can basically power the Melio platform. And that is the second example, the work we do for fintechs. That is our offering to see how you can leverage our services, our payment rails, our offerings in a very modern way. We invested a lot in digital onboarding, modern APIs, a new developer center that you can check out at developer.payments.jpmorgan.com, and really make it easy for fintech firms to also work with us, knowing that there's this large bank and then many companies that each have their individual needs and priorities so that we can make this productive for everyone.
And so would you say you are in the early innings of this journey? Would you say you are pretty mature now? How would you describe where JPMorgan is?
We are definitely mature. We have changed the way we operate to also integrate better with the fintech ecosystem. If you look at my management team, for example, probably half the leaders there come from tech companies, come from fintech companies. They know how you operate, and they know what is important and how to work with each other. We have changed organizationally of bringing product and technology teams closer together so that we also work and deliver like tech companies. And we leverage these partnerships much more and have had now real experience over the years. To put some numbers to it, we probably have a few hundred, I think between 300 and 400 fintech partnerships in place today, of which 60-ish are what I would call very, very meaningful. And there we do the whole spectrum between commercial partnerships, minority investments, to really majority investments, depending on what the situation is, what the needs are of our partners, what we want for our roadmap. But it's a very individual process, and we have learned a lot over the years.
I'm curious, in this journey, what's your North Star? Who do you look up to? I guess you guys are blazing your own trail a little bit.
I agree. There is obviously a lot of companies we look at, a lot we can learn. And again, to give a shout out to our fintech partners and competitors over the last 10 years, especially in payments, there were a lot of things that we learned from you. Focus on specific use cases, focus on customer needs, nimble delivery, non-bureaucratic way of really capturing opportunities. We observe this. We look at each of our partners, see what we can take away from this. I also observe our competitors very, very closely, and I ask every day, what can we learn from this? How can we get better to truly advance our offerings?
Great. I know that a lot of us in the audience, myself included, one of the things that I find quite valuable coming to events like this is getting a sense of where the industry is at, getting a sense of what are the growth spaces. Max, one of the growth spaces that we are working on, as you know, at Melio, is the small business space. It's quite interesting that the small business space remains quite unserved in payments, in software. Now, of course, the small business acceptance is pretty well digitized, but the rest of it, the back office and the other things, are still not. What's your sense of why we are here? What's your sense of what has been the barrier for the digitization of the small business back office, I guess?
Small business is a very, very interesting segment. They are very diverse. You have different small businesses by industry, by size, by region also. So it's very hard to have a one-size-fits-all solution in the space. And the second thing, most small business owners that I meet are really passionate about the business that they run, and processing payments or managing the back office efficiently is typically not high on the list. Where we want to help them is basically take these worries away from them and let them focus on running their business. And that is an important task, but it needs to be done differently depending on the context. And what we believe is that we want to meet the small businesses wherever they are. So if they happen to be a Chase customer, great, we can offer them a solution there. If they work with platforms like Melio or any other platform out there, we can support small businesses also through that and help our clients work with that segment. And it is such a big, growing, and important part of the economy in the US that there's plenty of opportunities.
There is definitely plenty of opportunities. We live and breathe the small business space every day. And I think many of you know this. There are 30 million small businesses in America, and roughly half of them are owned by the boomer generation. And there is this massive generational shift that's happening, and as younger owners take ownership of these businesses, there is clearly a need for more modern solutions. We work very closely with many banks, as you know, Max, and one of my observations, and I don't know if you'd agree with this or not, is the small business space historically has been left somewhere in between. And the consumer space on one side that has gone through pretty nice digitization, and the commercial bank space on the other side. Would you agree with that characterization?
Yes, and we also observe often that it's very hard to even describe the needs of a small business based on high-level criteria. You can look at revenues and size of the company, but it's very different if you look at a company that has, let's say, $2 million of revenue, that has already been in the market for 20 years, grows 2% a year, is quite steady, and is run by an owner family, or a $2 million company that is just venture-backed, growing, has massive demands, often a global network. So it's really a important task to look at each of these small businesses and see what is the right solution for them, because one size fits all clearly doesn't cut it.
Now, you run the merchant acceptance business for JPMorgan, which I'm sure is a very massive, I can't remember now the volumes, but it's a very large business.
2.4 trillion a year.
2.4 trillion a year. Any analyst you look at or any report you look at, they say that the B2B payment space is 3.5x of the C2B payment space. So that is like massive. And still, in the B2B space, a lot of the money rides on checks, it rides on ACH. So it feels like we are certainly part of it, but to us it feels like B2B is a 15 to 20 year growth run. What's your sense of that?
I agree. If you look at the numbers, the B2B market in the US is about 3 times the B2C market. But to your point, a lot of the discussions, interest is often around B2C. What we observe in the last couple of years, there's been definitely more increased interest now in B2B and helping companies of all sizes manage both payables and receivables better. The main driver for this, in my view, is probably interest rates, because the opportunity cost for not managing working capital in the best way possible has just increased dramatically over the last few years, and a lot of companies are thinking through what they can do better to be just more efficient, paying out and collecting money. And it is something that works in many companies and is kind of okay, but now we see a lot of customers taking a closer look, seeing what can be digitized, how to streamline the operations, have less errors, take advantage also of some of the innovation, real-time payments and otherwise, to really make sure that they use their working capital and payments capabilities in the best possible way.
Yeah. In the space that we play in, there is half a dozen companies, and what's quite interesting is if you add up all the customers we service today, together as an industry, we are still 5-6% penetrated, and there is this massive runway still left for all of us to grow, and we are all doing it in slightly different ways. One of the things that we get pretty fired up about is that we have a way to level the playing field, so to speak, in the sense that large companies, Max, get all kind of nice cash flow management solutions through tech providers, through banks like JPMorgan, but the smaller companies, mid-market companies and SMBs, they still lack all of these tools. What would you say about that? What's your sense of where are we today and what could change?
I think that is changing. And we saw this already in the the SaaS space, where these industry solutions went to smaller and smaller clients. I think when we talk about cash flow management solutions, digitized receivables, a lot of innovation and also investments, for example, at JPMorgan, and I'm sure other places, go into making these tools available more broadly. The challenge is always that you need to simplify them at the same time, because the needs of smaller businesses are definitely different compared to larger companies. But it is a huge opportunity. You mentioned the 30 million small businesses in the US, and we see this also as an important growth priority.
I think last year, with your leadership, JPMorgan launched the Pay by Bank offering, which I thought was also quite an interesting and an innovative initiative. How are you feeling about that? How is that going? What's your sense of where that's headed? You also obviously have a very large credit card franchise, but the fact that JPMorgan's taken a leadership step in Pay by Bank, of course, speaks to your company's leadership.
We want to give choice to our clients, and they should choose what payment methods they want to offer to their customers. And Pay by Bank is definitely an area where we have received a lot of interest, especially in the biller community also, who wants to reduce the check processing. And we obviously want to respond to that. I do think that for Pay by Bank in the US to truly grow, it is also important to not only have the payment rail itself in place, but also the whole ecosystem or infrastructure that makes a payment rail into a proper payment method, describing how disputes are being managed, chargebacks are being managed, returns can be managed, and I think that is still in the relatively early days and more work to be done. But if you look at other geographies, Pay by Bank is definitely an important payment method in Europe, Latin America, Asia, wherever you go.
So we have a couple of minutes left. We touched on a few things. I guess just to recap a little bit for the audience, we touched on the fact that JPMorgan is now a company that loves to work with and for fintechs. We touched on the fact that in the space that we are in, there are massive growth spaces still left in areas like SMB, in B2B payments. And you touched on some new innovations you're doing on things like Pay by Bank. For the entrepreneurs who are here today and attending this session, what advice would you have for the group?
So a few things. First of all, I would love to hear from you. As I said at the beginning, I think there's so much we can do together. And looking at use cases, if you have ideas, please reach out. We would love to hear from you. And as I said also at the outset, we have gotten pretty good at working also very constructively and productively with fintech firms so that we, what's the term, don't squash the butterfly or anything like that. But really, there's great opportunity to put the JPMorgan Chase franchise basically behind your business. And then the second piece is, do test us, check out our APIs, check out our solutions. The firm has really evolved, and I think our partnership is also a great sign to this. We know that it's important to make it easy to integrate with us. It's easy to work. Ask for our resources. We can help, as I said, with regulation, perspectives on capital raising. So there's a lot we can do together, and that is probably the most important point I would love for you to take away.
Yes, thank you, Max. Thank you so much. I would agree with what you said. When we started our partnership with you, I feel like we had these many ideas of things we can do together. And fast forward 3 years, I feel like the list of ideas has grown quite nicely. It's a combination of things we've suggested. It's a combination of things that your team has suggested. We've certainly enjoyed our relationship very much, and we look forward to doing more innovation together.
Thank you. And I think actually that is an example also how these relationships deepen over time. So don't expect that it goes from 0 to 100 on day one. You start with one thing, you get to know each other, you bounce ideas off each other. Some work well, some don't. You focus on the ones that do. And that is a foundation for a great partnership.
On that note, thank you very much, Max, and enjoy the rest of the afternoon.